Welcome to the Crypto Daily News. This podcast is created by Generative AI. Today is November 29th, 2024, and we're diving into the latest developments in the world of cryptocurrency, blockchain, and Web3. As always, links to all stories can be found in the episode notes. Bitcoin miners are experiencing a significant surge, with their combined market capitalization nearing $40 billion after doubling in value over the past 7 months. This growth aligns with a sustained increase in the Bitcoin hash rate, which has remained above 700 exahash per second for over a month. However, the mining difficulty is set to rise by 3% for the 5th consecutive time, making it increasingly challenging for miners to generate revenue. Currently, miners are only able to mine 450 Bitcoins per day, a situation exacerbated by the halving event in April that reduced block rewards by 50%. As of late November, the fees paid to miners have also dropped to cycle lows, with only 10 BTC in fees recorded. This has prompted miners to explore alternative revenue streams, including diversifying into artificial intelligence and high-performance computing sectors. Companies like Iron have seen significant stock price increases due to renewed interest in AI, while others, such as Mara Holdings, are bolstering their Bitcoin reserves. The CoinShares Valkyrie Bitcoin Miners ETF, which tracks publicly traded miners, has seen a 60% increase in share price this year, although this lags behind Bitcoin's 113% rise. The ongoing adjustments in mining difficulty and the competitive landscape highlight the pressures faced by miners in maintaining profitability amidst rising operational costs. The Genesis event for the Hype token is happening today at 7:30 UTC. Hyperliquid, the largest decentralized exchange by volume, open interest and active users, is behind this launch. The platform aims to merge the user-friendly experience of centralized exchanges with the self-custodial principles of decentralized finance. Operating on a modern Layer 1 blockchain, Hyperliquid utilizes HyperBFT, a proof-of-stake consensus algorithm capable of handling 200,000 transactions per second with a finality time of approximately 0.2 seconds. The Hype token will serve as the staked asset securing the HyperBFT network. The platform includes native components such as perpetuals and spot DEX, allowing users to trade assets like Hype USDC on its order book. Additionally, the Hyper EVM will enable programmability for both native components and general-purpose on-chain states, with Hype functioning as the gas token. The community surrounding Hyperliquid is growing, consisting of dedicated builders who will leverage the platform as an infrastructure layer for future DeFi applications. For further details, a blog post is available on Medium. VaderAI has introduced the Agentic ad framework V1, following a $10,000 airdrop of NRN tokens from @ArcAgents, which has become the largest position in its portfolio. The framework is designed to enhance advertising transparency and efficiency by allowing advertisers to manage campaigns programmatically without intermediaries. It also enables agent creators to monetize their content directly and provides clear benefits to token holders and followers regarding sponsored posts. The airdropped NRN tokens will be distributed to Vader stakers after a 1-month cliff, followed by a 3-month linear vesting period. VaderAI's approach includes fine-tuning its communication to promote larger holdings more frequently. The framework aims to address challenges in the agentic economy, such as optimizing vesting schedules and selecting the best agent KOLs for specific protocols. VaderAI is focused on building infrastructure for this economy, emphasizing the importance of AI agents in gaming. The founder of @ArcAgents, known for his innovative work at the intersection of AI and gaming, is acknowledged for his contributions to this initiative. Overall, this development marks a significant step in integrating AI with advertising and gaming, with the potential for further innovations in the future. The Onchain economy is experiencing significant growth, with a focus on Base's role in this expansion. A recent report highlights that the Onchain economy has surged, with daily transactions increasing by 50% year to date, and total value locked rising by 70% to over $70 billion across major networks. Base, in particular, has seen its TVL jump from $439 million in January 2024 to $2.51 billion by the end of October. marking a 470% increase and boosting its market share from 1.07% to 3.59%. Additionally, Base's daily transactions skyrocketed from 2.1 million to 42.34 million, a staggering increase of over 1,900%, elevating its market share from 0.67% to 9%. Stablecoins are a key area of growth, with total weekly volume rising from $89.7 billion to $249 billion, and Base's stablecoin volume increasing from $602 million to $62 billion, a gain of over 9,800%. Base's ecosystem is diverse, with over 60% of its applications extending beyond decentralized finance into gaming, collectibles, and social use cases. Despite the surge in demand, transaction costs on Base have decreased significantly, with average fees dropping 95% year-to-date. The platform has also seen a remarkable increase in user retention, with daily returning addresses rising from 59,000 in January to over 1 million in October. This growth reflects Base's successful strategy of creating a developer-friendly environment with minimal fees, attracting both developers and users. The full consulting report on Base's role in the Onchain economy is available for free, providing deeper insights into these trends. MetaMask co-founder Dan Finlay recently conducted an experiment with memecoins to explore the issues of consent and trust within the Web3 ecosystem. He minted 2 tokens, Consent on Ethereum and I Don't Consent on Solana, which led to a troubling experience that highlighted the intersection of hype and responsibility in the crypto space. Finlay's findings suggest that the memecoin environment lacks clear structures, leaving investors vulnerable to financial losses and misunderstandings about the token's purpose. He faced backlash from investors who expected more substantial plans for the tokens, despite their simplistic design. Finlay emphasized that while buyers consent to invest, the ambiguity surrounding what they are investing in raises questions about the nature of that consent. He drew parallels between the memecoin space and broader debates about consent in digital platforms, particularly in AI, noting a disconnect between protocol expectations and social expectations of consent. His experiment calls for improved infrastructure and tools in the memecoin ecosystem to enhance consent transparency and user trust. Finlay advocates for better tools and incentives for token issuers, suggesting that this could lead to a more engaging and responsible environment. He believes that establishing clearer systems of consent and accountability is essential for the future of Web3 and its integration with AI technologies. Overall, his insights highlight the need for a more structured approach to consent and trust in the rapidly evolving landscape of cryptocurrencies and digital platforms. Aave has launched a new initiative called Sky Aave Force, aimed at bridging the gap between decentralized finance and traditional finance to promote mass adoption. The initiative, led by Rune Keck and Stani Kulichov, emphasizes the maturity and resilience of DeFi protocols, suggesting that they can become foundational to the entire financial system. Kulichov believes that collaboration within the DeFi space can unlock unprecedented access and new use cases. Additionally, Aave is proposing significant upgrades under the Aave 2030 vision, which includes the introduction of Aave v4, a cross-chain liquidity layer, and non-EVM Layer 1 deployments. Aave v4 is designed to enhance capital efficiency, risk management, and scalability within the DeFi ecosystem. Earlier this year, Aave successfully launched GHO, a stablecoin that embodies the principles of decentralization and aims to democratize finance. The Aave community has also implemented a migration tool to facilitate the transition from Aave v2 to v3, ensuring a seamless experience for users. The Aave team remains focused on maintaining a secure platform, integrating risk management tools to protect users from potential issues, such as those arising from interactions with sanctioned entities. Overall, Aave is positioning itself as a leader in the DeFi space, advocating for a more inclusive and efficient financial future. Hong Kong has announced plans to reduce taxes on cryptocurrency investments, specifically for hedge funds and private equity firms. This move is part of a broader strategy to attract more financial services and investment into the region, particularly in the rapidly evolving crypto market. The decision reflects Hong Kong's ongoing efforts to position itself as a leading hub for digital assets and blockchain technology. By lowering the tax burden, the government aims to encourage more institutional investment in cryptocurrencies, which could lead to increased market activity and innovation. This announcement comes amid a global trend of regulatory adjustments in various jurisdictions to foster a more favorable environment for crypto-related businesses. The specifics of the tax cuts and their implementation timeline have yet to be detailed. Overall, this initiative is seen as a significant step in enhancing Hong Kong's competitiveness in the global financial landscape. That's all for today's episode of the Crypto Daily News. We hope you found these updates insightful and engaging. Remember, you can find links to all the stories we covered in the episode notes. Join us again tomorrow for more news and analysis from the world of cryptocurrency and blockchain. Until then, stay informed and stay ahead.